full estate tax strategy for property owners. Most people think estate planning is about wills, trust, and deciding who gets what when you're dead. But if you own commercial or rental property, there's a tax strategy you need to understand before 2026. It's called cost segregation, and when you combine it with a step up in basis, Form 3115, and the right estate planning, you unlock one of the most powerful wealth strategies in real estate. Let me explain. Normally, the IRS lets you depreciate a building over 27 and a half or 39 years. But with cost segregation, we break it into shorter categories, 5, 7, and 15 years. That means you get big deductions now, not decades from now. And listen, if you bought the property 5 or even 10 years ago, it's not too late. You can file Form 3115 and take all that catch-up depreciation this year in one shot using something called a Section 481A adjustment. Now here's the estate planning piece. When you pass away, your heirs get a step up in basis. That means all the depreciation you took gets wiped clean. There is no capital gains, there is no recapture, it's just a clean tax reset. You get the tax savings now, they inherit the property later with a fresh basis and no headaches. Now let's talk about estate tax and inheritance tax. Estate tax is a federal tax on the value of your estate when you die. Inheritance tax is state level only in certain states. Right now, the federal estate exception is over $13 million, but in 2026, that could get down in half. So depending on the size of your estate and where your heirs live, they could owe nothing or millions. That's why this tax strategy is so powerful. But let me be blunt. Not every estate attorney understands this. If your estate attorney doesn't know what cost segregation is, if they never filed a 3115, if they can't explain a step up in basis, you're talking to the wrong estate attorney. They might know trusts and probate, but that's not enough if you own real estate. And if you think I'm full of it, ask your CPA, ask your estate lawyer. And if they just stare at you, well, they might still be on the clue bus, because these strategies are legal, proven, and used by wealthy families every single day. And one more thing. The Tax Cut and Jobs Act expires after 2021. And while the laws may or may not change, we know this. Bonus depreciation is being phased out. Estate tax exemptions could drop. Income tax rates could rise. So this might be your last window to take full advantage of these tools while they're still here. If you own property worth $1 million or more, you qualify. I'm Nick. I help property owners and their advisors run free, no-pressure cost segregation proposals. I can include a catch-up depreciation also. My phone number is 919-632-0133. Message me directly. The IRS gave you the tools. Congress might change the rules. Use them now and leave your family better off later. Thank you. If you like this video, hit a like on the bottom and contact me with my email. Thank you very much. Again, it's Nick, 919-632-0133. Thank you for watching.